first up, let's bring you our top story today. The Reserve Bank has offered HDFC Bank relief on priority sector lending norms and has permitted the merged HDFC entity to now hike stake in HDFC Ergo as well as in HDFC Life to over 50%. This is before the effective date of the merger. So what does this actually mean and what are the brokerages saying on this? We have Abhishek here with a complete roundup. Abhishek.
Well, Pavitra, as you mentioned, RBI has provided certain clarification for requests made by HDFC Bank and HDFC Limited with respect to merger of both the entities. So first up, for priority sector lending target, 1/3 of HDFC's outstanding loans will be taken care of priority sector lending target for first year. The balance 2/3 will be done over the next 2 years. So this is a big relief in terms of meeting the priority sector lending norms. Investments including arms and associates of HDFC Limited can continue as investments for HDFC Bank. So with respect to stake in HDFC Life and HDFC Ergo, the bank can take up stake over 50% in both the entities. For HDFC Credila, they have to take the stake to 10%, down to 10% within 2 years. Other highlights are that they have to comply with CRR, that is cash reserve ratio requirement, SLR statutory liquidity ratio requirement, and LCR, that is liquidity coverage ratio without any exception. So from day one, they will have to meet the CRR, SLR and the LCR requirement of the merged entity. So HDFC's rates to be linked to benchmark within 6 months. This is a positive news given the fact that this will help in the yields remaining on the healthier side. HDFC Bank has arranged a con call in which they say the requirement for PSL kicks in only 12 months after effective date. So they have some time in terms of meeting the requisites, carrying excess LCR already in the balance sheet, and they are also carrying excess SLR as well as the CRR above the requisite norms. So brokerages have written note. CLSA says that a glide path of 2 to 3 years provides adequate time for HDFC Bank to reduce its priority sector lending norms versus negative PSL impact that would have happened on day one of the merger. Bernstein has also written, they say that the development increases the confidence of a smooth merger process for HDFC Bank and HDFC Limited. The pros and cons of RBI announcement: priority sector lending requisite meeting time is sufficient for the lenders to meet that norm. However, meeting CRR SLR requirement from day one can have slight impact on the immediate earning profile of the merged entity. However, it will get played out over the next couple of quarters. So things which are still pending with RBI in terms of the application and permission sought by HDFC Bank and HDFC Limited is clarity on valuation of certain assets that are held by HDFC Limited. Now, project financing loans that HDFC Limited has provided, there is more clarification needed with respect to certain procedural matters over there, and small investments in the book of HDFC Limited, how that will get accounted in the bank. So these are some of the key clarifications that HDFC Group is awaiting. Back to you.
Okay, thank you very much for that. So relaxation on the priority sector lending, but no relaxation on CRR or SLR requirements. But the stock of the day in the group is HDFC Life. It's now up close to about 4% in trade, but early in the morning, it was up nearly 7%. Surbhi is here standing by with the news on what's fueling the up move in HDFC Life. Surbhi.
Thanks for that. So RBI's decision to allow the merged entity HDFC and HDFC Bank to own over 50% stake in HDFC Life comes as a double booster. Now with this, HDFC Life will become a direct subsidiary of HDFC Bank. Now currently it has around 50% stake in the HDFC Bank channel, which is likely to improve from here on. Also, this will help to reduce their cost of distribution in the HDFC Bank channel, which will in turn help them increase their margins. Also, the possible overhang of a 19% stake sale by HDFC and HDFC Bank, if the RBI had directed to keep the stake below 30%, is now gone. Rather, it is now certain that the merged entity will acquire additional stake before the merger completion. Currently, Aberdeen holds 1.6% stake in the company and Exide Industries holds around 4% stake in the company. Just to alert, in September of 2022, Aberdeen had sold nearly 2% stake in the company. On the back of this news, brokerages have also upgraded HDFC Life. MK has upgraded the stock from an hold to a buy rating with a target price of 650, and Investec says that the stake sale overhang is now gone and HDFC Life remains a preferred pick for them among the life insurance players. They have a buy rating with a target price of 560.
Okay, got that. Surabhi, so that explains a little bit of excitement around HDFC Live today. But tell us, I believe there is a Morgan Stanley note, and they are sort of drawing out some takeaways for an ICICI Group company, ICICI Lombard. What exactly is MS saying?
That's right. So Morgan Stanley has an interesting view on this. Now, initially, ICICI Bank had to bring down the stake in ICICI Lombard to 30% by September 2024. As of March 2023, they hold around 48% in the company. Now, Morgan Stanley says by allowing HDFC and HDFC Bank to increase their stake in HDFC Life over 50%, RBI has now set a precedent. On its Q4 earnings call, ICICI Bank did not specify if they would want to increase or decrease their stake in ICICI Lombard. But Morgan Stanley writes some implications for ICICI Lombard stock. Now, what are they? One, there is a possibility for ICICI Bank to increase their stake above 50%. Before, they had expected this to move below 30%. Now, increasing the stake would remove a big overhang from the ICICI Lombard stock, and they expect this to be in talking point in the market until ICICI Bank states which course will it take in the future.
All right, Surabhi, thanks a lot for getting us all of the details. So that is a complete roundup of what's going on with HDFC, HDFC Life, as well as ICICI Life. So that is everything that we're tracking right now. But with that, we do have to get into a short break. When we come back, we're going to focus on the commodity space. We'll bring you an update with Manisha Gupta.